All right, so let's dive into this. Today we're going deep into Unicommerce eSolutions Limited.
Okay.
You sent over some pretty interesting documents about their recent performance,
Mm.
and we're here to unpack it all.
Yeah.
We've got their official statements to the National Stock Exchange of India
Okay.
and the Bombay Stock Exchange,
Right.
a detailed report from their auditors, S.R. Batley and Associates, LLP,
Wow.
and even a pretty slick investor presentation.
Yeah. Quite the information package.
So what are we really trying to understand here?
Yeah.
It's more than just numbers.
Right.
We want to uncover the story behind their success,
Yeah.
the strategies they're using, and what's propelling them forward in this booming Indian e-commerce scene.
Exactly. Think of it like this.
Okay.
Imagine looking at a beautiful painting.
Yeah.
You can appreciate the colors and brushstrokes,
Yeah.
but to truly grasp its significance,
Yeah.
you need to understand the artist's technique,
Mm-hmm.
their inspiration,
Yeah.
the story they're trying to tell.
Well-
That's what we're doing here with Unicommerce.
Love that analogy. And speaking of things that catch the eye, Unicommerce's revenue growth for Q3 of fiscal year 2025
Yeah.
is pretty remarkable.
Mm-hmm.
They hit INR 327.4 million,
Wow.
a 26.1% jump year on year.
Uh-huh.
Even more impressive,
Yeah.
their profit after tax surged by a massive 62.3% to reach INR 62.9 million.
Wait, a 62.3% jump in profit?
Yeah,
That's almost unheard of in this industry.
right.
What's really interesting is that their cost of revenue has barely increased,
Yeah.
meaning their core operations are becoming incredibly efficient.
Oh,
This suggests they've found a way to scale rapidly without letting costs spiral out of control,
yeah.
which is the holy grail for any growing company.
You've got to wonder how much of that success is tied to their acquisition of Shipway technology. We
Mhm.
should definitely unpack that later on.
Speaking of growth,
Yeah.
the Shipway acquisition is a fascinating case study.
Okay.
It allowed Unicommerce to expand their product offerings,
Mm.
particularly in the realm of courier aggregation.
Okay.
They've essentially become a one-stop shop for businesses looking to manage their entire e-commerce journey,
Yeah.
from order processing to shipping and delivery.
And it seems to be paying off, at least based on their financial performance.
Right.
They're even boasting about processing over 1 billion order items annually.
Why?
That's a mind-boggling number.
Yeah,
And shows how deeply embedded they are in the Indian e-commerce ecosystem.
that's not just a number.
Right.
It's a reflection of the massive shift to online shopping in India.
Mm.
Unicommerce is right at the heart of this transformation,
Yeah.
enabling businesses to handle the complexities of e-commerce and capitalize on this surge in online demand.
From what I've gathered, Unicommerce's real strength lies in its ability to simplify.
Wow.
They help businesses streamline operations,
Right.
cut costs, and boost sales, all from a single platform.
Yeah.
It's like they've taken the headache out of e-commerce management.
What sets Unicommerce apart is their focus on the mid-market segment,
Okay.
which is often underserved by larger competitors.
Mm-hmm.
Their platform is tailored to the unique needs of these businesses,
Yeah.
providing a user-friendly interface,
Right.
robust features,
Yeah.
and affordable pricing.
Okay.
This is where their efficient business model truly shines.
Yeah.
They're catering to a large and growing market
Right.
that's hungry for solutions that are both powerful and easy to use.
And to prove it, they've included some compelling case studies.
Mhm.
One highlights how they helped a women's wellness brand slash their return rates by a whopping 72%.
Wow.
Another shows a sexual wellness brand generating an extra INR 5.6 million in monthly revenue,
Wow.
thanks to Unicommerce's platform.
Those are remarkable results.
Yeah.
These case studies offer a glimpse into the tangible impact
Mhm.
Unicommerce is making for its clients.
Right.
It's not just about theoretical benefits.
Yeah.
It's about real businesses achieving real success
Mm-hmm.
using their platform.
Looking ahead, Unicommerce's vision for the future is equally ambitious. Yeah. They're aiming to be the undisputed leader in e-commerce enablement, riding the wave of the India market's incredible growth potential.
The Indian e-commerce market is projected to reach $200 billion by 2026.
Wow.
It's a staggering figure.
Yeah.
And Unicommerce is positioning itself to capture a significant chunk of that pie.
Mm-hmm.
They're not just targeting growth in India, though.
Okay.
With the acquisition of Shipway,
Right.
they're setting their sights on global expansion.
It seems like they're setting themselves up to be a global force in the e-commerce world.
They are.
Yeah.
But this aggressive growth strategy comes with its own set of challenges.
Okay.
Unicommerce needs to prove they can maintain their agility and innovative spirit as they scale.
Right.
It's easy to get bogged down in bureaucracy and lose that entrepreneurial edge as a company grows.
That's a great point. We should definitely delve deeper into that potential challenge later on.
Yeah.
But for now, let's take a closer look at exactly how this acquisition strategy is playing out. What do you think was the main motivation behind the Shipway deal?
It was a brilliant tactical move.
Okay.
Unicommerce instantly expanded its product portfolio, gained access to Shipway's established customer base, and solidified its position in the market.
Right.
This is a classic example of growth through acquisition done right.
Okay.
They're not just buying companies, they're strategically acquiring capabilities and market share.
It's fascinating how seamlessly they seem to have integrated Shipway into their existing operations, especially considering how quickly it all happened.
Right.
What potential hurdles do you think they might have faced during this process?
Integrating two companies, especially in the fast-paced tech world, is never a walk in the park.
Right.
Blending company cultures, merging technology platforms, retaining key talents. These are just a few of the challenges they likely had to navigate.
Right.
Their success so far suggests they've managed these hurdles effectively. But maintaining that momentum as they continue to acquire companies will be key.
Their investor presentation even claims that the Shipway acquisition expands their total addressable market to over $1.15 billion. They're talking about a combined TAM of $420 million for their core product offerings and $470 million for courier aggregation alone.
Okay.
Plus another $260 million for complementary products.
Those numbers are certainly eye-catching.
Yeah.
What's impressive is that they're not just throwing darts at a dartboard.
Right.
Their acquisition strategy is clearly aligned with their overall goal of becoming a comprehensive e-commerce enablement platform.
Okay.
By expanding into adjacent markets like courier aggregation.
Yeah.
They're creating a powerful network effect that makes their platform even more valuable to businesses.
And their client list is nothing to scoff at either.
Right.
They've got some big names on there.
Yeah.
Including major players in fashion, beauty, and even electronics. Clearly, they've earned the trust of some heavy hitters in the e-commerce space.
Their client list is a testament to the quality and reliability of their platform.
Yeah.
It's not just about the quantity of clients.
Right.
It's about the caliber of brands they're working with. This speaks volumes about their credibility and their ability to deliver results.
They also talk about the power of their network effects driven by their robust product, their extensive integrations, and their ever-expanding client relationships.
Yeah.
This seems to be a key element of their growth strategy.
Network effects are like a snowball rolling downhill.
Okay.
As more businesses join their platform, the value of the platform increases for everyone involved. This creates a virtuous cycle that fuels their expansion and makes them even more attractive to potential clients.
Their investor presentation highlights how their revenue is directly tied to the number of transactions processed on their platform. They're betting big on the continued growth of e-commerce in India, which, let's face it, seems like a pretty safe bet.
It's a solid bet.
Yeah.
Given the projected growth of the Indian e-commerce market, the sheer volume of transactions is expected to explode in the coming years, and Unicommerce is perfectly positioned to ride that wave.
All right, let's get a little granular here.
Yeah.
Their financial statements reveal some interesting details about their spending.
Okay.
Employee benefits and server hosting costs make up a sizable chunk of their overall expenses, which makes sense given their business model.
These are typical cost drivers for a SaaS company as they grow and handle more transactions. These costs are likely to increase.
Right.
The key for Unicommerce will be to manage these costs effectively while maintaining the quality and performance of their platform.
Okay.
Finding that sweet spot between cost efficiency and service quality will be crucial.
They also mentioned some exciting new initiatives they're working on,
Right.
like developing integrated solutions for automated payment and returns reconciliation.
Right.
That shows they're not resting on their laurels.
Yeah.
They're actively innovating and staying ahead of the curve.
Innovation is oxygen for tech companies. By constantly evolving and expanding their offerings, they can address emerging needs in the market. And attract a wider range of clients.
Okay.
It also helps them stay ahead of competitors who might be trying to catch up.
It's fascinating to see how they're weaving together organic growth with these strategic acquisitions. And let's not forget their recent initial public offering, which brought in a hefty amount of capital.
The IPO was a major milestone for Unicommerce.
Yeah.
It not only provided them with the financial resources to fuel their growth, but also increased their visibility and credibility in the market.
Yeah.
It's a signal to investors and clients alike that they're here to stay, and they're playing for the long game.
The materials also offer some insights into their management team and their vision for the company.
Yeah.
Kapil Makicha, the managing director and CEO, seems to be a driving force behind their success.
Strong leadership is crucial, especially in a fast-paced and competitive industry like e-commerce.
Right.
Makija's vision and execution seem to be key factors in Unicommerce's impressive journey so far.
And their CFO, Anurag Mittal, emphasizes their dedication to delivering long-term value to stakeholders while maintaining that impressive profit growth. They seem to have found that elusive balance between growth and profitability, which is a recipe for lasting success.
It's a tightrope walk, for sure.
Yeah.
You need to invest in growth while also ensuring you're generating profits and rewarding your shareholders.
Yeah.
Unicommerce seems to have mastered that delicate balance.
So if we zoom out and look at the big picture, what are the key takeaways from all this information?
Unicommerce is a company on the rise.
Okay.
They've carved out a dominant position in the Indian e-commerce enablement market and are setting their sights on global expansion.
Right.
Their strong financial performance, strategic acquisitions, and commitment to innovation suggest a bright future.
They're definitely a company worth watching. But now I want to dive into those case studies in more detail.
Yeah.
They offer some really intriguing glimpses into how Unicommerce's solutions are being used in the real world to solve real business challenges.
I agree.
Yeah.
The case studies provide a more grounded perspective, showing how Unicommerce's platform translates into tangible results for their clients.
Yeah.
They're not just numbers on a spreadsheet. They're stories of businesses overcoming obstacles and achieving their goals with the help of Unicommerce.
The first case study focuses on how Unicommerce helped a women's wellness brand optimize their inventory management and streamline their operations, which ultimately led to a significant reduction in customer return rates.
What's remarkable here is how Unicommerce tackled multiple pain points for this brand.
Yeah.
They provided a unified platform to manage both B2B and B2C orders, implemented advanced bundling and expiry management systems, and optimized order allocation and routing for faster processing. This holistic approach is a key differentiator for Unicommerce. They're not just offering piecemeal solutions. They're providing a comprehensive suite of tools that work together seamlessly.
They even went the extra mile to help the brand create customized reporting with Tally integration and specialized invoice templates for mixed CZUs. It's clear they go beyond providing a basic platform and really tailor their solutions to the specific needs of each client.
This level of customization and attention to detail is crucial for building strong client relationships and fostering loyalty. It shows that Unicommerce is truly invested in the success of its clients and is willing to go the extra mile to help them achieve their goals.
The second case study centers around a well-known apparel brand that was struggling with inefficient order allocation, high shipping costs, and a lack of real-time order tracking for customers. Unicommerce stepped in and implemented a series of solutions that streamlined their operations and boosted customer satisfaction.
And the results speak for themselves. A 42% drop in customer returns.
Wow.
A 10% reduction in logistics costs. And a significant increase in order volume. Those are tangible improvements that demonstrate the real-world value Unicommerce brings to the table.
They implemented automated courier allocation, provided real-time shipment tracking, and streamlined non-delivery report management with automated WhatsApp and SMS follow-ups.
Wow. They also use customizable workflows tailored to the brand's specific operational needs.
By automating key processes and providing greater visibility into their operations, Unicommerce enabled the apparel brand to operate more efficiently, reduce costs, and enhance the overall customer experience.
The third case study is particularly interesting
Okay.
because it highlights how Unicommerce's marketing automation platform, ConvertWay, helped a sexual wellness brand generate significant additional revenue
Wow.
through targeted campaigns.
This case study highlights Unicommerce's forward-thinking approach.
Okay.
They're not content with just providing traditional e-commerce enablement solutions.
Yeah.
They're expanding into adjacent markets
Right.
and offering value-added services that drive revenue growth for their clients.
They implemented gamification to grow their potential buyer list, deployed abandoned cart flows to recover lost revenue,
Okay.
and optimized SMS campaigns to improve ROI.
They also streamline processes for welcome messages and abandoned cart reminders through automation.
These are classic marketing automation techniques.
Right.
But what's interesting is how Unicommerce has integrated them into their core platform.
Yeah.
This allows businesses to manage their marketing efforts alongside their e-commerce operations,
Okay.
creating a more streamlined and efficient workflow.
And the results were pretty remarkable.
Yeah.
They saw a 15% growth in their subscriber list,
Okay.
a 2.5x increase in campaign ROI,
Wow.
and most importantly, an additional INR 5.6 million in monthly revenue.
Those are the kind of outcomes that get marketers excited.
Right.
It's not just about vanity metrics.
Yeah.
It's about driving real measurable results that impact the bottom line.
These case studies showcase the breadth and depth of Unicommerce's offerings.
Yeah.
They're not a one-trick pony. They have a comprehensive suite of solutions that can address a wide range of e-commerce challenges.
Their ability to cater to diverse needs and deliver tangible results is what sets them apart.
Okay.
They're not just a technology provider. They're a strategic partner that helps e-commerce businesses thrive in a competitive and ever-changing landscape.
And their focus on innovation and expansion suggests they'll continue to push the boundaries of what's possible in the e-commerce enablement space.
They're certainly a company worth keeping an eye on.
Yeah.
They're not just riding the e-commerce wave.
Right.
They're actively shaping it.
Now let's take a closer look at their financial performance.
Okay.
What are some of the key trends and insights we can glean from their profit and loss statements?
Their financial statements paint a picture of a company that's not only growing rapidly, but also doing so in a sustainable and profitable way.
Oh.
The revenue growth is impressive.
Right.
But what's equally noteworthy is their expanding profit margins.
Yeah.
Which suggests they're becoming more efficient as they scale.
All right, let's break it down.
Absolutely. Their consolidated financials, which include Shipway Technology for the last 15 days of December 2024, show a revenue of INR 327.4 million for Q3 FY25,
Right.
up 26.1% year-on-year.
Wow.
That's a healthy growth rate,
Yeah.
especially considering the integration of a newly acquired company.
And their profit after tax for the quarter was INR 62.9 million.
That's right.
Yeah.
And what's even more encouraging is that this growth is driven by a combination of factors.
Right.
Strong revenue growth,
Right.
efficient cost management, and increasing operating leverage.
Okay.
They've managed to improve their profitability without sacrificing growth.
Yeah.
Which is a hallmark of a well-managed business.
Their adjusted EBITDA margin, which excludes share-based payment expenses, expanded by a significant 620 basis points year-on-year to 27.1% in Q3 FY25.
Right.
This shows that their profitability is improving even faster than their revenue growth, which is a very positive sign. Exactly.
Yeah.
This margin expansion highlights their ability to scale their business efficiently.
Okay.
As their revenue grows, their fixed costs are spread over a larger revenue base, leading to higher profit margins.
Right.
This is one of the key advantages of their SaaS business model.
And when we look at their 9-month financials, the trend of strong growth and profitability continues.
Right.
Their revenue for the 9 months ended December 31, 2024 was INR 895.2 million.
Okay.
A 16.2% increase year-on-year.
And their profit after tax for the same period grew even faster.
Yeah.
Jumping 39.3% year-on-year.
Wow.
To reach INR 142.8 million.
Okay.
Their adjusted EBITDA margin for 9M FY25 expanded by 405 basis points year-on-year to 21.8%. Reflecting their continued focus on profitable growth.
It's impressive how they're managing to maintain this growth trajectory while simultaneously improving their profitability. They're firing all cylinders indeed.
Yeah.
Their strong financial performance is a testament
Right.
to their effective execution strategic acquisitions. and the overall strength of the Indian e-commerce market.
Now let's shift our focus to their key performance indicators, or KPIs.
Yeah.
These metrics provide a more granular understanding of the factors driving their financial success.
KPIs are the vital signs of a business, providing insights into their performance and helping to identify areas for improvement. Unicommerce's KPIs reveal a lot about their strategy and how they're generating value.
Their annual recurring revenue, or ARR, a crucial metric for SaaS companies, reached INR 1,309.6 million in Q3 FY25.
Wow.
A 26.1% increase year-on-year.
Okay.
This consistent growth in ARR indicates strong customer retention and a knack for attracting new clients.
ARR is a key indicator of future revenue streams and provides a more stable view of the company's financial health compared to one-time revenue sources. Unicommerce's consistent ARR growth reflects their ability to build long-lasting relationships with their clients and provide them with value that keeps them coming back for more.
Another important KPI is their enterprise client base, which grew by 19.4% year-on-year to reach 934 clients in Q3 FY25.
Wow.
This growth in enterprise clients signals their success in penetrating the higher value segment of the market, which often translates into more stable and predictable revenue streams.
Enterprise clients typically generate higher revenue and have longer contract durations compared to smaller businesses. Unicommerce's focus on attracting and retaining enterprise clients is a strategic move that will drive long-term growth and profitability.
And the volume of transactions they're processing is simply staggering. The number of items processed reached 259.1 million in Q3 FY25.
Wow.
A 15% jump year-on-year.
That's a testament to the scalability and robustness of their platform. They're handling massive volumes of transactions without breaking a sweat, which speaks to their technological capabilities and their ability to handle the demands of a rapidly growing e-commerce market.
They also track the share of revenue from their top 10 clients, which actually decreased to 20.4% in Q3 FY25 from 25.5% in the same quarter of the previous year. This diversification of their revenue base is a positive sign, as it reduces their dependence on a small number of clients and makes them less vulnerable to revenue fluctuations.
Revenue concentration can be a risk for any company. By diversifying their client base, Unicommerce reduces their exposure to potential revenue drops. If a large client were to leave, this balanced approach to client acquisition contributes to their overall financial stability and resilience.
So all these KPIs point to a company that's growing rapidly, managing costs efficiently, and building a solid foundation for long-term success.
They're hitting on all cylinders, that's for sure. But we can't ignore potential risks and challenges that could impact their future performance. Even the most successful companies face headwinds.
Let's explore some of those potential roadblocks.
One of the biggest risks is the competitive landscape. The e-commerce enablement market is getting increasingly crowded, with new players constantly emerging, and existing competitors fighting tooth and nail for market share.
So things could get a lot more heated in the future.
It's definitely something to watch. Unicommerce needs to stay ahead of the curve by continuously innovating and differentiating its offerings. Their comprehensive suite of solutions, strong brand recognition, and large client base give them a competitive edge. But they can't afford to rest on their laurels.
Another potential challenge is the relentless pace of technological change.